Hello, ladies and gentlemen. I'm Ines Dazi of Joy to be with you once again today. This is your boy Laurent. I am Laurent. I am from Togo, and this is a new channel. I'm here to talk about trading, just trading. Okay. I am from Togo. I am a Togolese. I'm pleased to have you all around. And my channel's name is Low Trade World. And I beg you, please subscribe, like, and comment, please. You can share the link to somebody in order to help him or her gain some insight in trading. Today, we're going to talk about the reversal patterns, the M and W patterns. Okay, what are the M and W pattern? What are they? We're going to, we're going to see exactly what they are and how to trade them. This is very important. This is the market of gold. I hope, yeah, here is it. So the M and W pattern are common reversal patterns in technical analysis. I'm really based. I'm really based. I based my analysis on the technical. I'm purely technical. I'm purely technical, but this does not prevent me to go and check the forest factory to see what is going on today before taking a trade, but I'm purely technical. So the M and W pattern are reversal patterns in technical analysis, helping traders identify potential trend reversals. First of all, we're going to talk about the M pattern. The M pattern is also known as the double top. Let me draw it with the trend lines. Okay, here we are. This is a double top. These are the tops here. Okay, good. So the M pattern forms when the price rises, pulls back, rises again to a similar level, and then drop. Let me explain this. The M pattern forms when the price drop. This is the first the yeah, when the price rises up, first of all the price rises up like this one. Price rises up like this. The price rises up. Pulls back. Here is the pullback. Here is the pullback. First we have the rising up, pullback, rises again. The price rises again to the dissimilar zone. So this zone must be resistance, a strong resistance zone. If you want to trade the double top securely, you have to mind this zone. You must know exactly the zone in which the price is ranging here, is making the pullback. Okay, then we have the drop. Okay, this pattern signals a bearish reversal after an uptrend. Yeah, while the market will be going up, 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 up. So this pattern will show, especially if you find it in weekly, you find the M pattern in weekly, in daily, and in 4 hours. It really, really, really works. It really works. So we have some key characteristics. These are the characteristics. We have two peaks, high points, 1, 2. Okay, at similar level. This is the level. This level. Okay. Then we have a support level. We have a support level, which is the neckline. Here is it. Here is it. Let me draw it. Let me draw this. Here is the support level. Here is it. Okay, this is my neckline. Okay, the neck. This is the neck of the M. Okay, this is what we call the neck line. So a support level that when broken confirms the pattern. So when this neckline, well, this neckline, let me change the color. Let me put it in green or in red. It is very important. Okay, in red, please. Good. Here is it. So if the price breaks the neckline, you can get into the market. So a support level, yeah, sorry, which is the neckline that when broken confirms the pattern. Increase volume on breakdown, so you can assist on somehow some kind of distribution. You'll see how volatile will be the market price here when this neckline is broken. Okay, so we have an trading strategy to trade this one. First of all, this is a plan. Okay, this is the strategy you must follow. You must identify the two peaks forming an M shape like this. This is the first one. The second one, this is an M shape. Okay, it's very, very important. The second one, you must draw a neckline at the lowest point between the peaks. This is the lowest. These are the peaks. This is the lowest point. You draw the neckline in red as I did it. Wait for the third step is to wait for the break of the low. Okay, the break below the neckline. Wait for a break below the neckline for confirmation. Then number four, set a stop loss above the second peak. The stop loss must be somewhere here. The stop loss must be here. I need to give this a color. Need to give it a color. Okay. No bad, no bad. Okay. Number five, then you set the target. Okay. Target a price drop equal to the height of the pattern. Yes, yes, it depends. This will help you. You see, here is it. You draw the line like this and you put it like this, okay? Target a price drop equal to the height of the pattern. This is the height of the pattern. So this is the equal height of the pattern. You put it at the downside. When the price breaks the neckline, you get into the market and you set your goal somewhere here. You set your goal here. Where is this? You set your goal here. This is our target line. This is our target line. Okay. Now let us talk about the W pattern. The W pattern. I must change the color. In technical analysis, you must work with the chart patterns. They really matters. Chart patterns really matters in technical analysis. So very, very important. And if you understand this concept of the chart pattern, reversal pattern, the M pattern, and the W pattern, it will really, really change your trading. Very, very important. So important. This is the W pattern, okay? The W pattern forms when the price falls, okay? The price is falling, 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 and made a support level, a strong support level. Okay, as I was saying that the W pattern forms when the price falls, rebounds, falls again to a similar level, and then rises. So here is it. Here is it. Okay. This pattern signals a bullish reversal. So the market was dropping down, and when you start seeing the pattern, the W pattern, you must know that the market is willing to reverse to the upper side. Okay, the market is going to take a bullish trip. This pattern especially signals a bullish reversal after a downtrend. You have some key characteristics of this particular chart pattern, the W chart pattern. Okay, two throws low points at similar level. Here is it. As we have seen it, this is the reversal. There is the reverse of this one. Okay. Here is the here is the peaks. Here are the bottoms. Yeah, there are we talk about the bottoms here. Okay. This is a similar level. The price drop here, rises again, drops again. Oof. Okay. On the same level. Okay. So this is the neckline. This is the neckline. Let me draw the neckline. Good, 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 good. Here is it. I must change the color of this neckline. Very important. Must change it. Red, yeah, no problem. So a resistance level neckline, these are resistance level. So very often there is a resistance level somewhere here, which drops, which make the price to drop again. You see this? So this is a resistance level. So the neckline is at a resistance level. Good. So it may go high. The price when the price break this, it may go up strongly. Okay. We have some strategies to follow. First of all, you identify the two throws. You identify the two throws, forming a W shape. Okay. Here is a let me show you the two throws. Okay. This has formed a W shape. The second one, I draw the neckline. And the third one, I wait for the break of the neckline. And the fourth one, as we have seen it, with the bearish chart pattern, the M pattern, we wait for the break above, we wait for the price to break above the neckline and we get entry. We make an entry. Okay, we set our stop loss somewhere here. It depends, yeah, but the safer place is here. So nobody knows. Okay. So you must target a price like rise equal to the height of the pattern. So the same thing that I did here. Let me use this line. I did the same thing here. I put it here. So I will set my target somewhere here. Okay. For beginner traders, this will really, really help you. This will really, really help you. Okay, let us go to the market and look for a kind of example. You can see, okay, let me do it this way. Let me do it this way. Uh, as far as I'm concerned, the chart pattern are formed in high time frames and are visible in lower time frame. For example, let me take this drop, okay? This drop, this rising, this doji candle, and this bullish candle, this second bullish candle. What happened? We are in daily here. Let me do this. Okay, I'm going to talk about this zone. Just this zone for the W pattern. Let us get down to the 4 hour. This is the 4 hour chart pattern. So this is the drop. This was the indices candle. The indices candle formed in daily. Here is this one. Okay. How do I personally trade such a reversal? How do I trade it? Say, yeah, yeah, we are in a bullish market. We are in a bullish trend, and this was forming. It is going to confirm the continuation of the bullish trend. Okay, so what do I do? I get down to the 4 hour. I draw the drop, the first drop. Let me change its color in black. Yeah, good. As you seen it in the theory, you have the drop that rises up into a resistance level, then it drops again. It drops again, and get, yeah, and gets up. Okay. So what do I personally do when the first drop is formed? When the first drop is formed and the price rises to a resistance level, what do I personally do? I I check inside the the rises the rising of the price. Okay, when the price drops first and gets up the second time, I will check for a zone. Okay, I have a gap here. I have a gap. Have a gap here. This is low trade world. If the content is useful for you, please subscribe because we're going to launch many, much more important information here. Nothing to hide. So this is good. Okay. So this is the gap. So I just want to wait for the price to get into the gap, and look for an entry confirmation. So I'll wait. I rather wait for the closing of this 4 hour candle, red candle, and after that I can get into the market. Okay. For example, as you said it, if you do this, someone can remark that is not this one. They are not in the same zone. So this one, the first bottom is in another zone. The second is in another zone. So this is to explain you that we have many kinds of W pattern, and this is the same thing with the M pattern. Okay, you must know that the price, when rising up and coming down, we get into a zone before going up. Because no matter what kind of trader you are, you must take your positions inside a zone, a particular zone. This is very important. So you can make profit, you can make much profit from the break of the trend line here to the up one. I'll see. I'm in the 4 hours. I can see, I can wait, even wait. There is a gap, a second gap here. Okay. If I miss here, if I don't take position here and I waited for the break of the counter trend line, let me draw the counter trend line to help everything to be clear for everybody. This is the counter trend line. Let me draw it properly. Good. The color blue can help us. Good. So this is a second gap. This is an imbalance. Okay. When the price breaks the neckline, it comes down. It comes down. It came, of course, after forming this gap. The price gets into it. Let me go to the 1 hour to confirm what I'm saying. Here is it. Yeah, here is it. Okay. Here is it. The price consolidate. So you must know that the index is a kind of consolidation. Okay, if you see the daily consolidating, you must not get into the market. You must wait, really wait for another setup. So yeah. This is the This is the 18th of February. Okay, the price gets down after the break of the counter. Please, I want us to talk about the counter trend line. Please, it's not a counter trend line. This is the neckline. After the price breaks the neckline, it gets down into this gap that I've drawn. Okay, then I'll make my entry here, and I'll then set my target somewhere here. Somewhere here. This is a great and a beneficial profit. So this is an example. This is an example. This is a particular example. Let us go to the to US 30 to see whether we can find an example. An example in weekly. Weekly is like a uh, yeah, this is an example. a strong example. This is a gap. This is a weekly gap. How strong this must be. Okay. So when the price when the price gets into the this zone, it consolidates. It consolidated, and while consolidating, I must wait. Okay, when I want to trade this one and I see a consolidation, I must wait because the price must get down here. Nobody knows. Okay, this is a probability game. So let me get down to the daily. Let me get down to the daily. Okay, here is the daily. So the price consolidates here. So this is the drop. Let me draw it. This is the drop. Okay, this is the drop down. Let me get on to the four. Here we are. Okay, so this zone is still being the support zone, the strong support zone until the price uh gets down and pull back, gets down, and in the 4 hour chart, it is clear. Let me draw it properly. This is very important. What I've shown you right now is a secret, an important secret for forex traders. No matter the market you trade, this will really help you. It really matters. Really matters. So I call you again to subscribe to this channel. I am at the end of this presentation. This is a high volume. This is the neckline. This is my neckline. My neckline is somewhere here. Neckline is somewhere here. At the break of the neckline, you, you make your entry. Let me set the target. This is the target. Here is the target. Okay. My profit line is somewhere here. Somewhere here. In the 1 hour. What can I see in the 1 hour? Wow. So the price breaks the neckline early in the morning. Just how the opening, the price breaks through the neckline, so you get entered. And the whole day was a bullish day. So this is a kind of wonderful and marvelous trade. Okay, so I am at the end. Thank you for giving me your time. Thank you for waiting till the end of this presentation. I'm really glad to have you all around. Please subscribe to my channel. This is Slow Trade World. We're going to exchange in trading. You can write me comment. You can write me in the comment section. Okay. I will write your. I will write back. I will respond back if you send a comment. Please, once again, do me a favor, subscribe. Goodbye.